Welcome to the Whitwam Wealth Real Estate Podcast. Today our topic is Real Estate Investing Beginners Q&A.
Welcome to the Whitwam Wealth Real Estate Podcast with Scott Whitwam, your blueprint to financial abundance. Settle in as we explore the mindset and methods for wealth building through real estate.
Welcome back. I'm Scott Whitwam, and I'm glad you joined me today for Real Estate Investing Beginners Q&A. Today we're going to be tackling investor questions that we've received from beginners. I have a running list of questions that I've been asked, from listeners, from students, and on social media. And so today I'm going to take on some of these in the larger public forum of this podcast. I'll start with the premise that there's never a bad time to start investing in real estate. Never a bad time to start investing in yourself, and there's never a bad time to start investing in your family and in others. Real estate after 35 years remains my favorite and most profitable investment. It is tangible, and they're not making any more of it. So let's take on some questions. All right. Okay, what is the best way to start investing in real estate? I'd have to say the best way to start investing in real estate is to take action. Most people never get started in real estate because they never take any action. They talk about it, they read books about it, and now, they're out watching YouTube videos about it. You may even be watching this podcast today thinking about it. But the number one way to get started in real estate is to take some action. You have to do something. For some people, that may be hiring a coach. Hiring a company like our Whitwam Wealth Academy in order to teach you the steps, to be proficient at real estate investing. But it's not the only way. You can start investing, pick up a book, and take some action on the steps that are in that book. You know how many people I've talked to who have read books on real estate investing? And you ask them, well, have you done anything in the book? Well, no, but I've got the information out of it. I have a coaching student who has said the very same thing. They've taken this class and they've taken this class. And I said, well, what have you done? Well, I haven't done anything. I'm still, kind of getting the information. Well, the number one and best way to start investing in real estate is to just do to do it. You've got to take some action. And then if you need help, like I said, hire somebody, hire a coach to help you move forward with real estate investing. There's a lot of people that coach like I do that help people who are starting out in real estate become proficient at real estate. All right, next question. What types of properties should I invest in first? Well, my recommendation is if you are just getting started, that you start with single family residences. Her referred to as the SFRs, single family residence. And it is generally the safest because it's the most known. You can garner the help of real estate agents. When I say that, I'm talking about an investor-friendly real estate agent, somebody who's got vast experience with real estate investing. Hire a real estate brokerage that is proficient in real estate investing. That's why I built a investor-friendly real estate brokerage so that people would have a place to go where the broker understands real estate investing. That can help the agents out and help their clients out with their real estate investing goals. But start with single-family residents. They're the safest. There's more information out there about them. Not only do private money investors understand single-family, but also corporate investors, banks, credit unions understand real estate investing in the single-family residence area. There's lots more opportunity in this area because you could be talking about condos, townhouses, detached homes, and even fourplexes, because VA and FHA consider a fourplex and under to be a single-family residences. And a VA and FHA both have programs available where you can buy a multi-unit property up to 4 units. As long as you live in one of them, you can rent out the other and use that income as investment income. So I would start with single-family residence if I was getting started. That doesn't mean that you can't start with multifamily. It doesn't mean that you can't start with commercial or industrial or agriculture or any of those other things. But there's more complications. There's some, there's less lenders and investors available in those market areas. But, there's still good places. But again, single family residence is where I would start. Okay, what's our next question we have here? What are the most common mistakes new investors make? I would say the biggest mistake a new investor makes or a beginning real estate investor makes is trying to do something way above their level of knowledge. So for instance, when I got started in real estate 35 years ago, I bought a single family residence that had a home that we were going to remodel and live in while we remodeled it. And then at some point we were going to put a tenant in it. So why, I had never invested before. Why did this make sense? Because I've lived in a home before. I know how to fix things up. I know that other people are going to want the same type of thing, a place to live, a place to raise their kids, and those type of things. So it's something that even though I hadn't invested before, I had some knowledge about how to do it. If you go and try to take on something like, let's just say a strip mall, or you got 25 commercial tenants, 25 different commercial leases, all of that type of stuff, and you've never done it before, you're going to find yourself in over your head and probably fail at it, most likely without some help or some advice. So I would say that, the biggest thing is trying to, do something that's beyond the knowledge level that you have. The second, I think, most common mistake that new investors make is they just don't continue to take action. We talked a little bit on the last question. You have to continue to take action because it's a big mistake if you don't, because if you don't take action, at some point you're going to find yourself without the opportunities that you're looking for. So, all right. So next question. How do I set realistic investing goals? Well, I guess my question is why do you want to set realistic investing goals? I heard somebody explain it this way, that the goals shouldn't be normal, ordinary, or realistic. They should be big, hairy, and audacious. They should be big because if your goals aren't big, they're not going to push you. When we talk about, something that's audacious, it's over the top. So, your goal, your realistic goal may be to acquire your first real estate investment. I think that's a good goal. But why not push yourself a little bit and make your goal acquire 4 real estate investments? Set a timeline. Make big goals. One of the things that causes people to underachieve and to not find the success they want is they're always limiting their goals. They're lowering their expectations. They're lowering the demand on their capabilities and their abilities, and therefore they're underperforming where they would like to be. And then 20 years down the road, they're saying, well, I wish I had. I wish I had done that. What if I would have done this instead? And don't leave anything on the table. Make big goals and push yourself. And one investment property may be pushing you. So start with that maybe and get one under. But once you've figured it out, once you have a template to do one, now push yourself and make your goals big. All right, next question. How much money do I need to start investing in real estate? Well, we talked about this on a previous episode, but the reality is you don't need any or much money to get started investing in real estate. Now, if you have $20 or $50 or $100,000, good for you. You're going to have money that you can leverage in a more traditional fashion. But really, to get started investing in real estate, you don't have to have anything. There are kind of some what I would call levels of investing. I mean, you could start again as a deal digger. Somebody who's a referral partner with another real estate agent with no money, and you're getting paid just for the referral of bringing them a deal, and then they pay you. You can take that money then and maybe then do a joint venture with that same investor. So you've been a referral partner with an investor, and I do this with some of my referral partners. They've brought me deals. I've paid them referral fees. Now they have a deal they want to do on their own, but they're undercapitalized, and so they bring it to me, and we partner together to do the deal as a joint venture deal. And so now instead of getting a referral fee, they get a part of the profit from the transaction. And then the next step would be doing one on your own, and then doing multiple on your own. But you don't have to wait until you have a lot of money to do that. If you've been able to save up, you've got a nest egg, if you've got some money to invest, then you're ahead of the curve. But don't let money be the factor that holds you back. Get started with what you have today and take action. Action is the number one thing. When you create the mindset that you can do anything, you'll find out that money is not necessarily your limiting factor. You may be able to use your good credit, you may be able to use your good name and couple those together with no money and create a transaction. When I did my first deal, I didn't have any cash, my credit was shot, and they never even asked about my reputation, but I did have a good name. I mean, our businesses were growing and well known in the area. But this person lived over an hour away and ran businesses in a much bigger town an hour away. He never heard of me. He didn't know anything about our businesses. And so without having, cash, credit, or name, we were able to acquire our first investment property. So you need to take action, and you don't have to have money. Start where you are. Start with what you have. If you have a rich uncle or a rich friend, then maybe that's the place that you can start too. If you do find yourself needing money for repairs and rehab and those kind of things. Okay, the next question: how do I find good real estate deals? Well, this is a subjective question. Good to who? To one investor, a 4% return on a buy and hold property may be a good investment. For other investors, a 10% return may be a good investment. And are you really looking for good, or are you looking for great? Are you looking to flip and make, $10,000 or $100,000? So the question, I think, with regards to how do I find good deals, depends, because you got to first know what a good deal is for you. You have to know your numbers. And you'll hear from me from time to time. In fact, as my coaching students hear this all the time, you have to know your numbers, because the numbers are going to determine the good deal. And if your investing goal is 6% or 10% or 15%, then a good deal can be evaluated. And where do I find these good real estate deals? I find them pretty much everywhere. I mean, sometimes we do postcard mailings, sometimes we do personal letter mailings, and then we're involved with networking. I'm involved in networking groups. Sometimes I just start going to garage sales and estate sales and asking if properties are sold. We've done door knocking and bandit signs. Those little ones you put at the intersections and the corners. So good deals can be found anywhere. Sometimes you find them on Craigslist. Sometimes good deals can be found on the multiple listings service through a realtor. And so good deals can be found anywhere. I know what people are looking for is, where is that diamond mine? Where is that gold mine? I can tell you everybody would love to know exactly where that is, but I know small and large investors, and they're all doing something similar, but they're all doing it in vast areas. And so here's what I always say, that if you're looking for good deals, do something, whether it's networking. If you're networking and you're not getting any deals, then do less of that and do something else. If you're sending out postcards to neighborhoods and you're getting good response, maybe you do more of that. If you're advertising in a newspaper and you're not getting a response, do less of that. Do more of what works, do less of what doesn't, and always try new markets, new opportunities. Maybe you get involved with your kid's PTA and you start going there, make it known that you buy houses for cash. At church, wherever it is that you are, let people know you buy houses for cash and get the word out. And what starts to work and bring in opportunities, do more of that and do less of the stuff that doesn't work. Okay, let's hit one more here. What financing options are available for real estate investments? There's lots of different financing options available for real estate investments. I mean, you can do the traditional go to your local credit union or bank and talk to them about investor loans. Typically, those require 20+% down. They have a little bit higher than market interest rates, and you can use those for your real estate investments. The other thing that you can do is you can do private funding, depending on whether you're flipping or doing long-term holds. There's different type of lenders who lend into each market. Also, you can use no money down buying avenues, which would include the options that we've talked about many times on this podcast. Wrapping, lease option, condition credits, joint ventures, seller carries. All these type of things can be used for investor financing. Personally, I like private financing. I like developing a network of private financing. When we do a lot of fix and flips, we do a lot of those through hard money, or we'll do joint ventures on them in addition to our no money down options. And so there's lots of different financing options for real estate investing. And, if you're working with a real estate coach, they can help you walk through some of those type of options for you. But you can develop some of those relationships by going out and meeting people who lend in that place. Get involved with some real estate investment groups. You can find out what other investors are using or they're doing in that market space to invest in their real estate opportunities. Unfortunately, we're out of time for this episode, but we're not out of questions. We still have a lot of questions left to answer. You've been listening to the Whitwam Wealth Real Estate Podcast, and I want to thank you for taking time to listen. And if you found this episode, Real Estate Investing Beginner Q&A, helpful, be sure to subscribe or leave us a review. And if you have any questions, we'd love to hear from you. We just might answer them right here on the program. You can always find the Whitwam Wealth Real Estate Podcast on Apple Podcasts, Spotify, iHeart Podcast, YouTube, or wherever you listen to podcasts. This is Scott Whitwam. Be sure to join me next time on an episode of the Whitwam Wealth Real Estate Podcast, where we're wealth building through real estate.